Tips for saving money on everyday expenses. When it comes to financial planning, getting started can be one of the most challenging aspects. This step-by-step method can assist you in developing a strategy that is straightforward and attainable, which will allow you to save money for all of your short-term and long-term goals. Number 10. Record your expenses. Finding out how much you spend is the first thing you need to do before you can start saving money. It is important to keep track of all of your spending. This includes not just your usual monthly payments, but also things like cash tips, coffee, and household items. Recording your expenditures can be done with a pencil and paper, a straightforward spreadsheet, a free online spending tracker or app, or any other method that you find most convenient for you. Once you have your data, categorize the figures by categories, such as gas, groceries, and mortgage, and then sum the amounts for each category. Make sure you have included everything by checking your record against your bank and credit card bills. Number 9. Make room for savings in your spending plan. You may start working on a budget now that you have an idea of how much money you spend in a typical month. Your spending should be compared to your income in your budget so that you may better plan your expenditures and avoid going overboard with your spending. Be sure to add in expenses that come up frequently but not every month, like maintaining your vehicle, for example. Create a category for savings in your budget and attempt to save an amount that first feels manageable to you in terms of both time and money. In the long run, you should make it a goal to put away 15 to 20% of your gross income in savings. Number 8. Discover strategies to reduce your expenses. If you are unable to save as much as you would want, it may be time to reduce the amount that you spend. Find ways to save money on things that aren't necessary, including going out to restaurants and entertainment. Look for ways to cut costs on your regular monthly outlays, such as your auto insurance or your cell phone plan, and save money where you can. There are also other ways to reduce the costs of day-to-day living, such as looking for free activities. Make use of resources such as listings of neighborhood events to locate entertainment options that are either free or cost very little money. Take a look at the ongoing fees. Cancel any memberships or subscriptions that you aren't using, especially if they are set to automatically renew. Compare the costs of eating out against those of preparing meals at home. Make a plan to eat the majority of your meals at home, and on the nights that you feel like treating yourself, look into the specials offered at local restaurants. Put off your purchase till later. Wait a few days before giving into the urge to buy something that isn't required. You might conclude that the item was more of a want than a necessity for you, in which case you might devise a strategy to put money aside for it. Number 7. Establish savings goals. Establishing a financial savings objective is among the most effective methods there is. To get started, give some thought to why you might wish to save money shortly within the next 1 to 3 years, as well as in the more distant future 4 or more years. The next step is to estimate both the amount of money you'll need and the amount of time it will likely take you to save it. Number 6. Establish your financial priorities. Your objectives, in addition to your income and expenditures, are likely to have the most influence on how you partition your savings. For instance, if you are aware that you will need to purchase a new vehicle in the not-too-distant future, you might want to start putting money away for it right immediately. But don't lose sight of your long-term objectives. You mustn't let planning for your retirement take a backseat to meet your immediate requirements. The process of learning how to prioritize your savings goals might provide you with a clearer picture of how to distribute your money. Number 5. Be sure you are using the appropriate equipment. There are a variety of savings and investment accounts available that are appropriate for both short-term and long-term objectives. You are not restricted to selecting a single option. You should carefully consider all of the available options, including balance minimums, fees, interest rates, the level of risk involved, and how soon you will need the money to choose the combination of savings vehicles that will most effectively assist you in achieving your long-term financial objectives. Objectives for the near term. Consider using one of the following FDIC-insured deposit accounts if you will need the money soon or if you need to be able to access it quickly. One or more savings accounts. A certificate of deposit, sometimes known as a CD, is an investment product that allows you to invest money for a predetermined amount of time at a rate that is typically higher than the rate offered by savings accounts. Long-term objectives. Consider the following if you are putting money down for either your retirement or the education of your children. Individual retirement accounts IRAs or 529 plans, which are tax-efficient savings account securities, such as equities or mutual funds, individual retirement accounts (IRAs), or 529 plans, which are FDIC-insured retirement savings accounts for individuals. These financial products can be obtained through the opening of investment accounts with a broker-dealer. Number 4. Make saving automatic. Nearly all financial institutions provide customers with the option to conduct automated transfers between their checking and savings accounts. You can decide when, how much, and where money is transferred. You may also choose to split your direct deposit so that a portion of each paycheck is deposited directly into your savings account. The benefit of this approach is that you do not need to give it much thought, and as a result, you are less inclined to spend the money instead. Some simple methods of saving money include the rewards and spare change programs offered by credit card companies. These programs automatically round up purchases to the nearest dollar and deposit the difference into an investment or savings account. Number 3. See the increase in your savings. Every month, you should go through your budget and evaluate how you are doing against it. This will not only assist you in sticking to your personal savings strategy, but it will also assist you in identifying difficulties and finding solutions to them more quickly. Learning how to save money can even motivate you to look for further methods to cut costs and accelerate the achievement of your financial goals. Keep in mind that securities are not covered by the FDIC, do not qualify as deposits or other obligations of a bank, and are not backed by the financial institution that issued them. They are susceptible to the dangers of investing, one of which is the possibility of losing your initial investment. Number 2. Give the envelope technique a shot. The majority of the products that you purchase are most likely paid for with either a debit or credit card. Yet, specialists believe that using a card to pay at the register would often result in a higher total expenditure. The reason for this is cash out of sight, cash out of mind, which means that if you can't see how much cash you're spending, you're more likely to spend more of it. Put your weekly spending money in an envelope and then only use the cash in that envelope for the week. This may take some getting used to, but it will be worth it. When you use cash, you won't be able to buy things on the spur of the moment or spend a lot of money on things that wouldn't make you bat an eye when you used a credit card. This will help you make better financial decisions. Number 1. To invest to save. But let's face it, utility bills rarely go down over time. You should take the initiative to weatherize your home as soon as possible. You can get an energy audit by contacting your utility company and asking for one, or you can find a licensed contractor that can provide you with an energy efficiency analysis for your entire home. This will range from simple upgrades like sealing windows and doors to installing new insulation, siding, or Energy Star high-efficiency appliances and goods. Some of these improvements will be simple, while others will be more involved. You may be able to cut your monthly expenses for utilities by several $1,000s. How did you like the video? Do you like it? Leave your valuable comments in the comment section below. And don't forget to like, share, and subscribe to our channel on YouTube.